This is the You Know a Trader podcast, commentary on life as it relates to the markets, finance, and the economy. Nothing within this podcast should be viewed as an investing or trading recommendation. You Know a Trader, Aileron Trading, or any other entities referenced or discussed are not registered investment advisors or should be taken as advisory services. They do not tell or suggest which securities, currencies, or derivatives should be bought or sold. Any speakers or guests of this channel may hold long or short positions within the currencies, derivatives, securities, equities, or industries herein discussed. There is a high degree of risk involved in trading. You Know a Trader, Aileron Trading, or any other entities referenced or discussed are not registered investment advisors or should be taken as advisory services. They do not tell or suggest which securities, currencies, or derivatives should be bought or sold. Any speakers or guests of this channel may hold long or short positions within the currencies, derivatives, securities, equities, or industries herein discussed. There is a high degree of risk involved in trading any financial asset. You should always check with your licensed financial advisor and tax advisor to determine the suitability of any investment. Or you should ask the firm with which you invest, trade, or deal about the specific terms, conditions, tax implications, and risks of any financial instrument and the associated obligations that such trading may place upon you. You should always check with your licensed financial advisor and tax advisor to determine the suitability of any investment. To your individual circumstances, no assumptions should be made in relation to the performance or accuracy of the method shown. No claims are made as to the success or profitability of any statements made.
Keeping groups of people angry at one another is such a wildly profitable business model. You will notice that I did not say it is a good business model. I don't think it's ethical. Being in finance myself, I can tell you for a fact there are ways that I could play such a business model. There's no way I'm going to play that business model because I don't think it's ethical, right? I don't think it's a good business model and that it's ethical or people should be doing that, but it is wildly profitable. And you see it all over finance, getting this group of people mad at that group of people. And as a business model, I would call it a type of arbitrage. So, what do we mean by arbitrage trade? Let's side tangent just for a little bit here in the beginning. I'm going to explain different forms of trading, okay? For those of you that tune in because you just say, hey, I just know this trader guy and I want to hear what he thinks and I like this podcast. So for those of you that are tuning in or may not be as familiar with different forms of trading, we're going to go through and I'm going to try and make this brief. Yeah, me. I'm going to try to make this brief. And we're going to go through different forms of trading. And I'm also going to try very hard not to geek out on you on different forms of trading. Well, why? Why did we jump from the idea of keeping different groups angry at one another being a wildly profitable business model to all of a sudden discussing different forms of trading? Again, stay with us. It's because keeping different groups angry at one another is a business model. And I think the best way to think about it is as an arbitrage trade. So I have to explain these different forms of trading so that you can understand, oh, I see what he means by arbitrage trade. Okay, so when most people think of trading, right? Let's try and get through this quickly, Dan. So when most people think of forms of trading, they think of buy low, sell high, and buy low. That's only one form of trading. We call it outright directional trading. Right? So that's what most people think of. Buy low, sell high, buy low. That's one form of trading. However, and it's a form of trading that I engage in. There's another form of trading, also a form of trading I engage in, that's called spreads or pairs trading. So what you do is you get A, and let's say you want to buy A, and you want to sell AX. They're very tightly correlated. In other words, they move so similarly, right? And you buy one and you sell the other. They're similar, but they're not the same. The correlation is not one, it's close. And what you're doing is you're not like trying to buy low, sell high necessarily. You're playing the difference between that correlation. And that correlation generally snaps back in one way or another, and there's your profit, right? So I'm buying A, I'm selling AX when they're loosely coordinated, and then when they snap back together, bam, there's my profit. There's many ways you can win on such trades. People think, well, I'm not going to make any money there, right? Why would I cut A in half by selling AX? That doesn't make any sense to me. What you do is you increase the position size such that you can make some money. As well, there are multiple ways to win in that trade. One cannot move and the other moves a lot, vice versa. Both move at the same time in your direction. There's a lot of ways you can win with those sorts of trades. They give you time. If you're wrong, there's management. There's tons of reasons why people spread and pairs trade, okay? I'm not going to go through all the complexities of spreading or pairs trades now. But what I do want you to focus in on is the fact that it doesn't care as much about the direction of A. It doesn't care about the direction of AX. It cares about the difference in the spread between those two instruments. That's what it's trying to capitalize on. Okay? I'm a massive fan of spreading. It does have its drawbacks. Capital efficiency, right? Every form of trading, there's some pros and there's cons. And one of the, there's a number of drawbacks when it comes to spreading. I'm trying really hard here not to geek out on you with for the non-traders among us and get into all the wonderful things about spreading in pairs and how you can avoid the drawbacks. I'm not going to do that. We're just trying to describe the different forms of trading. And thus far we have outright trading, buy low, sell high, or sell high and buy low. We have pairs trading or spreading. Equities traders call it pairs spreading or pairs trading, whereas futures traders tend to call it spreading. And again, what I want you to focus in on, especially for new and aspiring traders that I help quite a bit over at GTC Traders, a lot of newer traders only think in terms of buy low, sell high, or sell high and buy low, and that's only how they can frame sort of their look at a market. And that is not how spreaders or pairs traders view markets. They don't view it in that directional manner. They view it as the difference in the spread. How loose is the correlation? How tight is the correlation? And that's pretty much all they care about. And what is the typical norms for any particular market? And one cares about direction. The other, as we've already said, does not care about direction. There are other forms of trading. Being delta neutral. In other words, what you're trying to do is maintain a position where you're sucking some premium out of the market. This is done with options primarily. Sucking some premium out of the market, which is your profit. But you're trying to keep all of your positions in such a place that where if the market goes sideways, you're golden. You are cleaning up. Sometimes you'll hear newer traders complain, man, this market isn't going anywhere. Nobody's making money. Oh, I can assure you, people are making money. People like me. Because I also trade delta neutral to some extent. We have strategies in our multi-strats that are delta neutral. So trust you me, I'm selling premium on both sides and loving the fact that when a market goes sideways. Matter of fact, you know why I got into delta neutral trading? Is because there was this 2-year period. I had just come off this massive winning streak after the great financial crisis. And then I swear, maybe I didn't adjust my volatility well enough. See, here I am, sort of geeking out in trader speak, and we're not supposed to do that on this podcast. And it seemed like every trade I got in, it just went sideways. It just went nowhere. And it's like, how am I going to make money? I was like, there are those options traders selling premium. And that's generally how I got into delta neutral trading, is because to a delta neutral trader that trades in options, sideways markets are a dream come true. Okay? So now we have 3 forms of trading. Only one of them cares about direction. Outright directional traders. Then you have spreading or pairs trades. Does not care about direction. They care about the difference in the spread. Then you have delta neutral option players who, again, do not care about the direction per se. As a matter of fact, they want it to go just sideways, and they're golden and they're making money. And they have to make adjustments to when things go awry to make sure, okay, there's sort of a middle envelope there. And again, this group does not care about direction as much. Now let me get to a third form of trading here, broad form, and we're going to call it arbitrage trading, right? And this is my real point and why I wanted to bring this up. An arbitrage looks very, very similar to a spread trade or a pairs trade in that you're buying this and selling that. Then why isn't it I'm trying to think, because it can get very, very, very involved. As a matter of fact, there's a form for it where we refer to something as a complex arbitrage. So it can get pretty involved. But you're buying A, you're buying A1, you're selling A2, and selling A6. because of some differences you noticed. And it may not just be multiple legs of a spread or just multi-leg spreads. Those are still spreads, but you're generally after something else. There's a third piece you want, and that's your profit. That's what you really want. And I'm not going to get into all the complexities of how that's done here. That's not really the point of this podcast. But it's almost like you take spread trading and pairs trading and you graduate it to it's gone to Oxford University. And that's sort of arbitrage trades. And that's the best metaphor I can think of to come up with it is arbitrages are like very complex spread trades that are not just interested, although they are interested in the difference between these different legs, A and A2 and A6, and making sure that spread differential changes. But it's also after something completely different, that by getting A and A6 to do what they're doing and close that spread, they also profit from a completely unrelated variable. We'll call it B. And B, bam, they've got their profit. So just rewinding this all the way back to the beginning, and hopefully I didn't geek out too much or lose you there with describing the different forms of trading. But it's going to be important in this podcast that you do understand those different forms of trading, and specifically spreading and arbitrage trades. So I call when you have entities that are very interested in keeping different groups angry at one another, I call that a form of arbitrage trade. So what are we talking about, right? Well, let's use an example. We're not going to geek out and we're not going to talk politics or anything like that. Let's just use an example we're all familiar with, right? Social media. So social media, right? You'll have somebody and they create a channel and they want profit. We'll call that B. So they want profit. They want to grab that profit. And they know group A over here, right? They generally feel a certain way about a topic, and they know group AX feels a different way about that topic, right? And they'll play the two groups against each other. And something like rage bait, right? They may not feel any particular way about any particular topic, but they know if I put that out there, people are going to argue it back and forth and back and forth and back and forth. And as they're arguing back and forth, which is what I want them to do, my profit increases because now I'm getting impressions, now I'm getting engagement. Thus the profit goes up. Rage bait, that's a form of arbitrage. And I would call it when this whole model that we started talking about there at the beginning of having one group mad at the other group, right? That's a business model. People work that business model in a number of ways, and you see it everywhere. Now, I'm a Generation X guy, right? So I think of all of the political turmoil that you saw in the 1970s and the 1980s, and I like to stay abreast of world events, so I'm even thinking in countries in South America and in Africa, right? What was a great business model? Hey, Group B, do you know why you're oppressed? It's because of those guys over there. Oh, really? It's because of those guys? Yep, that's why you're poor. That's why your life's not going anywhere. It's all because of them. And Group B looks over at Group A, and it's like, those sons of guns, they're right. They did do that, and I don't have any money, and I am poor, so this must be the result of that group over there. It's like, all right, now, you just pay me a membership fee into this particular party, and then I'm going to, whip you up into a fury, and you go beat up on Group A over there. And say, yeah, Group A is horrible, Group A is horrible. All right, we'll pay those membership dues. Boom, right? There's the arbitrage trade. Person in the middle is just sitting fat and happy. You see it today with this whole generational war thing, right? So for you folks that were around during my first iteration on social media, I think it's pretty crazy, isn't it, how much time has passed? I mean, when I first started, I think I was like in the second half of my 30s, and now here I am mid-50s. That is just crazy to think about. I mean, 60 is not too far off for me. That just blows my mind. I know you guys in your 30s and in your 20s like, oh my God, he's close to 60. Well, it's like, it's a number of years off still, but when you get older, the years pass more quickly. It's very, very, very simple math, right? What's the percentage of 1 year to a 5-year-old? It's 1/5 of their lifespan, right? What's 1 year to a 20-year-old? It's 1/20th of their lifespan. That's why time seems to go more quickly. It's just percentages, that's all. But as I am older and I do realize the years pass very quickly, I'm like, holy smokes, 60 isn't too far off. Wow, can't believe that. But as such, I am Generation X. And as we were tying the earlier conversation and what we were saying before, what do you think of when you think of the names of different generations? Which, by the way, is sort of a new phenomenon. All the generation wars, right? The baby boomers against the millennials, and then there's the zoomers or Generation A. All of that. Generation Y is actually what we originally called the millennials, because we were Generation X, and so it's like, so what are we going to call this group? Actually, originally we were calling them Generation Y. But that whole generation thing sort of only started when I was really young. It's like, I don't really get it. But yes, I am Generation X, and you see all these generation wars. And I'm sorry, but a lot of people saying this stuff and getting generation, the baby boomers mad at the millennials and the millennials mad at the baby boomers. They're just working an arbitrage trade against you. I'm telling you. And I don't get it because I'm Generation X. And Generation X, pretty much we don't care. All right? We just don't care. And I don't even get it. I don't understand all the angst against. You look at any generation and there's things they did wrong and the things they did right. Any generation. Don't care what it is. And there are no angels among us, okay? And I don't get, I like to stay positive about people. I don't get the anger towards baby boomers. Like, baby boomers gave me some of the greatest things I have in my life that I just love to death. Baby boomers gave us John Hughes. So people think of like Ferris Bueller and, all of these movies that were just incredible John Hughes movies that we love to death. Pretty in Pink, right? And they're like, yeah, that's a Generation X movie. Well, you realize that was made by a baby boomer. Oh, that's just a one-time thing. Is it though? Is it though? That Generation X movie you think about, Ferris Bueller, it was created by a baby boomer. Well, yeah, it's just a one-time thing. Really? Sid Vicious. Everybody thinks of Sid Vicious. They think of what? They think of Generation X. Sid Vicious was a baby boomer. I hate to shatter all of your little preconceptions, but when you actually look at it, Depeche Mode, Martin Gore, baby boomers. They're not Generation X. New Order, Joy Division, Johnny Rotten. Need I go on? Mike Ness and Social Distortion. You think, oh yeah, Generation X. No, they're all baby boomers. I'll give you one that'll blow your mind. Everybody thinks this Generation X. One of my favorite bands in the world. I could go on and on about them, but I won't. Robert Smith and The Cure. All baby boomers. And I love all of that music, right? Gave us some of the best music and films and times of my life. And like I was saying before, I'm Generation X. We just can't be bothered to care, And it's somewhat interesting to me that we get painted as very tough folk, right? Oh, Generation X, man, they are tough. Like, they were just left on their own as kids. Which, you're right, we were. We were. But you got to remember, I know a lot of generations as a Generation X guy, right? So I'm originally from the South. We call our grandparents Mama and Papa. Side tangent. It's not Meemaw and Peepaw. It's Mama and Papa, right? That my Mama and Papa, or my grandparents, were of the lost generation. So my grandfather, or my Papa, was born in like 1892. Yeah, think about it. If he had a large family and my parents were some of the youngest of his kids, they're going to have somebody that's in their mid-50s. And I knew and I loved my Papa and Mama. I loved them dearly. And I knew them. And they were just you want to talk about tough. So look at my Papa and Mama. You think Generation X is tough? Let me think. Papa grew up around Civil War veterans as a young man. So he knew many, and when I say young man, I'm saying in his teenage years, he knew many, many Civil War veterans. In Appalachia, he was surrounded by them. Then he went off to fight in World War I, which was basically, if you know anything about World War I in history, was a charnel house, was just a human meat grinder from which you could not escape, and basically some people's version of hell and what hell would be like. I mean, it's just unreal, the meat grinder that was World War I. Oh, and he was in the Battle of the Argonne Forest, in the Argonne Offensive, and he got, which basically means he was part of the group that was surrounded, fought their way out. Oh, and Papaw got isolated from his unit behind enemy lines. It is a miracle I'm alive, quite frankly. He went through that. Got home, recovered from the trauma of being in World War I as a sergeant. Oh, and then he's home and starting to raise a family. And just about that time, the Great Depression hits. The Dust Bowl. If you look up any history about the Dust Bowl, they basically thought it was the end of the world. You want to talk about a climate catastrophe, which does happen from time to time on this planet. Nothing we have today could even begin to approach the nightmare that was the Dust Bowl back in the 30s and the scorching high temperatures that came with the Dust Bowl. Oh, so, and by that time that happened, the Great Depression happened. Oh, and during the Great Depression, as he's trying to raise a large family, there's no social assistance, by the way. As a matter of fact, my papa ran off any social assistance, viewing it as an insult to his manhood. Right about that time, it's time for World War II. So his oldest sons are going off to World War II to fight in another, end of the world part part two. Vietnam. He was born in a world with no cars, no airplanes. And by the time Papa saw Vietnam, saw the Korean conflict, saw the Cold War, the advent of nuclear weapons, people in space, going to the moon, by the time my Papa passed away, and we had that funeral on that hill I'll never forget as long as I live, with the 21-gun salute and the red poppies handed to my grandmother, he had already lost some children and family to the Spanish flu. Oh, I forgot about that one. Yeah, the Spanish influenza. Yeah, he lost family to that. The one that was basically so bad that we were losing a percentage of the Earth's population. So he saw that as well. I say all of that to say, yeah, people think Generation X is tough. My grandparents' generation. My grandfather was born in the 19th century. And as a matter of fact, being from Appalachia and Logan County, West Virginia, saw the largest, he was present. I can't believe the history that man saw. For the largest armed labor uprising in United States history. Oh, and being in that area, he knew Cap Hatfield. So, the son, Hatfield? Yeah, he knew Cap Hatfield. So, just the history that man saw. Those folks are who I think of when I think of tough. Just tough. So what's my point in saying all of this? Look at rage bait on social media. Look at the wars that have been fought, the massacre of human beings, by getting Group A mad at Group B, pay us some political fee so that you can say that you're proudly a member of, and we're making the money off of you, and then you go fight Group A, and throw Group C in there too with it, right? Look at the anger that has just risen and become more heated in the last decade or two between generations, millennials, baby boomers, all of that stuff. There are people, here's the point, zero in on this right here, okay? There are people in the middle of that making money off of it. Rage bait is probably the best example of it. Get this group mad at that group, and somehow in the middle of that, as that anger is rising, or we would in that say in trade speak, the correlation is approaching 1, which is what you want. On the spread trade, you're getting something else out of the middle of it, which is money. Now, up to this point, I think if we sit here and think about that, it's pretty easy to see, right? it's not some great revelation. Other people have commented on this before. Then why am I bringing it up? Well, it was sort of inspired by a conversation on this channel, on the YouTube, I should say, on the YouTube Aileron Trading channel, or You Know a Trader, on the actual video portion on YouTube. I had that entry, GameStop, GME, Puking Emotion 101, right? And some of the folks I was just commenting with, because, you know, it likes that. It loves the engagement. So I was like, hey, if you're going to keep coming back and calling me stupid, I don't care about that, because I got my thing going on and it's awesome. And all you're doing is increasing I'm actually working a spread trade there. It's like, not an arbitrage, but it's, well, no, actually, they are the ones that instigated the arbitrage trade, right? Because I said this, it's like, well, you're stupid. And it's like, well, I'm not going to reply to that or respond to that. However, I am going to respond because that only benefits me. So you initiated this, and I'm going to respond because I know it increases my engagement stats. So if it increases my engagement stats, yay me. So if you want to call me dumb and an idiot and that somehow you feel better for that, have at it. I'm going to thumb your thing up. I'm going to love the comment. I'm going to do as much as I can. Oh, yeah, well, that's pathetic. Okay, I'm going to reply to that. You keep on opening the door. I'm not instigating this arbitrage trade. You are. And I did not say anything to instigate any sort of rage. I was just explaining the emotion behind house money phenomenon, which, by the way, is not something that I invented at all. It's a well-known, academically studied cognitive bias and cognitive phenomenon. And I'm just trying to describe it to these guys that play around in markets, right? I don't think they're really professional by any stretch of the imagination. So on that entry, however, there was a younger guy, and he was actually respectful and showed some humility. So I'm trying to explain to him some concepts that he seemed to have mixed up. He was bringing up HFT. So, you know, you can't see what's going on. He was bringing up dark pools. He was bringing up dark pools, ATSs, block trades, relationship trades, right? He's bringing up the reporting of shorts. And I'm trying to explain to him, well, first of all, there was a lot. There was a lot under the hood there. And it took me some time to see that basically he had built a cognitive bias in himself, that he was being had by somebody else. The market's opaque and I can't see what's going on. And my point was, well, you can see what's going on the SIP very easily. Just look at the SIP. Seems pretty easy to me. Securities Information Processor is what that means. Basically, if you boil it all down, all of these prices going on in different places, whether it's a block trade, you know, sort of a relationship trade, I should say, or some sort of ATS in a dark pool, it all has to be distilled down. What's the price today for that security? It's the price. We're all paid on the price. I can tell you right now. Let me look over at my other monitor here. Bringing up GameStop. Hey, good to you guys. I know you're outright directionally trading this. You're not particularly involved. I don't think any of you are involved in a spread, a pairs, being delta neutral, or an arbitrage trade, though many people who you're trading with and are your counterparties may be doing that. But it looks like it's risen a little bit. So right on the SIP right now, we're on 28.74, 28.75 at the moment. So it's raised a few dollars. Golf clap for you guys. Regardless, that's what you're paid on. Why would you be involved in the market at all if you didn't think that was a real price? Because, and again, it was like B Renegade or something. And I got to say, I'm not attacking the guy because he was actually rather respectful. He said, you obviously know more about markets than I do. So I said, you know what? I'm going to put together something for you. This is not to attack him. It's for him. Give him some things to think about, because I see so many of these younger guys getting caught up in this stuff on these message boards. And they're very obvious to anybody that's a professional. They're very obvious cognitive biases. So think about what you're doing. So you've bought GameStop on a directional trade, non-spread, non-delta neutral, non-arbitrage. So you bought low and you want it to go high. Okay, great. Well, if you thought the price was fake, then why are you participating in the game? If you don't think at the moment SIP is reading 28.74 and it bounces around, right? Offered at 28.76, bid right now at 28.74, last 28.75. If you don't think that's real, then why are you playing the game? Ask yourself that question. If it's manipulated against you and can be manipulated for long periods of time, then it could be manipulated against you, right? Well, that's your belief anyways. We're all fighting each other is the reality. You're fighting me, I'm fighting you. That's what markets are for. That's why you have an offer, bid, offer, mark, bid, offer, mark, bid, offer, data reshuffles, mark. That's negotiation. It's a fight. We're all against each other. And as I've explained at the beginning of this the outset of this podcast, if you think that the price is manipulated against you, and as I explained earlier, an arbitrage trade, a spread pairs trade, delta neutral trades have incredible duration. They can go on for so long. That's the point of them. It's one of the benefits. It's why I spread trade. It's why I pairs trade. It's why I love relationship trades. It's why I'm delta neutral. It's why I like arbitrages when I can find a good arbitrage. If that's the case, and I have duration on my side and you don't because you're a directional outright trader, why would you buy it at all? Because I have all of the advantages. Let me tell you something. At the moment, 28.77, that's the real price. And you're involved because on a subconscious level, you think it's the right price. You bought at a price and accepted the offer, if you lifted into the offer, that is, and you didn't let it back into you, because you believed that price. Wherever you're long from, don't you believe that price? And let me tell you something. Like, to get out, you need a price. That's just first of all. Second of all, a lot of the information you have, and this isn't an attack, it's just wrong. Okay? There seems to be this belief that if you can't see something happening in the market, then it's being manipulated against you. First of all, whatever comes out in the mark, that's the price, because that's what you get paid on. And if you get paid on it, that's what you build a risk model off of. You don't get paid because something's hidden or not hidden. Well, there's icebergs and there's other order types, and I want to get to that. Yeah, there's orders that are hidden. Awesome. Like, you need to think through this problem. You don't need to go to Reddit or one of these idiotic boards or Elite Trader or any of these other nonsensical idiotic boards, right? And they are. Those I will attack because they're filled with so much misinformation. Get a cognitive bias in your head, like somehow that's manipulated just against you. We're all against each other. And I see a lot of this stuff with Gamestop. We're going to get those hedge funds. Really, how's that working out for you? You getting them? I mean, the very first comment that was made, and I tried to enter because it was like, come on, dude, do you really believe that? It wasn't an attack. Where was it at? I'm scrolling through it. Here it is. You should look at the economy as a whole. I find that pretty fascinating. Honestly, mate, you can ask people my track record on economic calls. It's pretty stunningly accurate. That's not me blowing my own horn. That's pretty auditable track record. You should look at the economy as a whole and not just individual stocks. Your entire portfolio is going to be worth nothing soon because hedge funds have been gambling with your money to fund their yacht parties. Just be renegade. If you were here in front of me, I would be telling you this. Do you see the problem with that statement? Do you see your own cognitive bias? Your entire portfolio is going to be worth nothing soon because hedge funds have been gambling with your money to fund their yacht parties. How does that have anything to do with buying or selling or being delta neutral or an arbitrage trade with somebody else? Oh, so you're mad at somebody else. Oh, so you have rage in your group against another group. Interesting. My brother, do you have any idea how many times, not just myself, but many individuals have followed the path of money? If you're young, we say follow the money. And a lot of the stories you hear are constructed, as we said at the outset of this entire podcast, to get you angry at somebody. And you're reading something on a Reddit board, you're reading something on a website, somebody has a newsletter, somebody's being interviewed on a particular TV station, and they are giving you a bunch of reasons why you should be angry at the hedge funds on yacht parties. I don't understand what that has anything to do with the price on the SIP or a risk model at all. To get you angry, and they're like, that's why you need to buy XYZ. And you go buy XYZ. And you are playing right into their hand. They are using your cognitive biases against you, because when you follow the money and then follow the company that owns that company, and then that company's a little harder to find because they're based somewhere else, and it's somebody that literally told you to get into it, that is basically using you to back in to the opposite side of the trade that they're trying to unwind from. Do you have any concept how many times we've seen that happen in capital markets? Matter of fact, years ago, we sort of coined a term. My particular group I was in, we coined a term in my first iteration called Doom Porn. Doom Porn. It was literally like getting people excited and using something referred to as catastrophe bias. By the way, there's a flip side to catastrophe bias, right? Normalcy bias. Everything's going to be normal. Everything's going to be normal. I urge people not to have a bias either way. Don't have a bias for, don't have a bias against. Just read the data. And I can tell you, bringing up block trades, ATS, not bringing up the SIP or the risk model, then talking about how I should be mad at some other fund other than my own firm because somebody's been gambling with my money. How are they gambling with my money? My money's my money. To fund their yacht parties. Do you see the cognitive bias there? I'm just asking you honestly. And then when you follow the money and the person saying buy GameStop and feeding you with all this, they're making the money off of it by being on the other side of it and telling you, please buy GameStop, please buy GameStop. You younger guys, markets and approaches to trades are much more involved than what you realize. There are specific orders and blocks of orders that are in the market, like icebergs, I think of in derivatives or other ways that you can tell the exchange, please hide the true size of this order. And it's like, man, that is an awesome tool. You could use that to great effect. Why are you mad about it? The SIP is the SIP is the SIP is the SIP. Sorry, but it is. Whatever the mark is. The mark is the mark is the mark is the mark. The hand you're dealt is the hand you're dealt. You build the risk model off of that. And we can set our own payout odds, quite frankly, which makes trading just so attractive. Unless you have some weird cognitive bias hang up. But as I was saying, years ago, we had this term because people were getting excited by stoking their catastrophe bias, which is sort of an excitement and a predisposition to things always turning bad. Things are always going to be bad. Oh, that's bad. That's bad. No matter what happens, it's somehow going to be bad. And there can be a psychological excitement around that idea. And people see themselves as the great survivor because they have that cognitive bias, and they whip that up and they whip that up. The lunacy that we heard that these people were spouting off that were whipped up by doom porn. I'll give you an example. Back from those days. I have been hearing, and I'm not making this up, I have been hearing about the collapse of the dollar since 1978, and it's been going on much longer than that. A big group came out in 1972 about the collapse of the dollar. I first heard about it as a young kid in 1978. Then it was 1983, and the 80s, and the 90s, and the aughts, and the teens, and here we are in the 20s. And we are still hearing about the collapse of the dollar. And it's always this doom thing. And if you look into doom porn or catastrophe bias, you'll see how people are excited about that. And back in, and I'm not bringing this up to keep on going over the old days of my first iteration. I got to stop doing that because people are going to start coming on that weren't around for that. So it's like, we're getting to a point here where I've just got to leave that first iteration of what I did on social media behind, and we're going to talk about things moving forward. But the reason why I'm bringing this up is, to me, it's a very recent example. It was only 2010, 2011 that it happened. Very recent in my mind. I realize for you younger guys, oh my God, that was so long ago. It really wasn't, but I get it. But in my mind, this is a recent example. The dollar's going to collapse. There's going to be hyperinflation. People were getting excited about how they were the smart ones and everybody else was stupid because they weren't in the know. Ton of Dunning-Kruger going on at the time. So you had catastrophe bias, you had the Dunning-Kruger effect in full play, people that were completely inexperienced. And it was a new thing, right? Something new had been going on in the economy. I was bullish on stocks the entire time, as well as the US dollar, and I was right. I think of that line from The Blacklist, Raymond Reddington. I never tire of being right. I was right. Again. But anyways, all this massive stuff, collapse of the dollar, hyperinflation, blah, 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 blah. So what you need to do, and here it came, was you need to go buy an ounce of silver. Now, I believe in having physical bullion. I have physical bullion at the moment. I believe in having physical bullion. I have no problem with physical bullion. I also trade the derivatives in them. I just love assets. But the things they were saying were so stupid, it was mind-numbing. And they were looking at COT reports and believing that they could. It just blows my mind. I'm like sitting here thinking about it. You guys, I know I'm trying not to bring up all the first iteration stuff from the previous social media, but I'm sure you guys are chuckling about it too now. You remember how many times we were told we were going to be sorry? We were going to be sorry because we didn't know. We weren't in the true know. Because what you had to do is buy an ounce of silver. And they believed, they didn't understand that they may be holding positions in swaps. They didn't understand they may be holding other derivatives, that there are other pairs, that there's no possible way that you can know what is in anybody else's portfolio. And if you could, it wouldn't help you at all. Maybe if you're trading on the milli structure, right? When we say the milli structure, I don't mean the trading the market microstructure, which is like, how things get passed from a matching engine to the SIP. I'm talking like real quick scalps, right? Okay, trying to figure out how another side is positioned is how trades are made, right? When I find out somebody's massively long and they've got a bigger side than me, guess what? They can get squeezed and the market goes the other direction. You know what I'm going to do? I'm going to hop on and do it the other way. So why is it okay for you to do that to them, but it's not okay for them to do that to you? It doesn't matter. Like I said, it doesn't matter knowing where somebody else is positioned, and we should specify that. It doesn't matter where somebody else is positioned in a single market, right? So just taking this whole example that we're talking about, looking at GameStop, I know that they are short from X. I know they are short from $20. So I know if I push, it's going to cause them pain. Now, absolutely in a single market, and that's the only position, that is the only position that would help you. So I guess we should specify that. The problem is you don't know if that's their only position. You don't know what are the warrants, what other derivative positions, what type the correlation is, how big the position is. Well, usually you don't know how big the position is in relation to the size of the portfolio. If they are short in some way on something with a correlation that approaches 1 on that same market, then knowing where they're positioned long doesn't help you in the slightest. Now, in a single market with no other positions, if we're not talking about anyone that is spreading or anyone that has a pairs trade on or anyone that has an arbitrage trade on, yes, absolutely, that would help you. And I'd be one of the guys pushing. That's a very viable strategy in markets where spreading is not as dominant, right? Hey, I know they're long from, or they're short from 30. Okay, well, it's 30-50 and they're beginning to sweat. Push it. Absolutely viable. The problem is all the information you don't know, and that's why earlier we said it would not help you at all because of the information you don't know. What matters, you don't make money from chart patterns. You don't make money in any other way than having a risk model. This is how I manage my risk. When I make wins, this is how the wins stack up compared to the losses. And we do XYZ and we do ABC, and that's the risk model for this program, and we run it. That's how you make money. But they had believed that if they could convince people to buy an ounce of silver, and if everybody did that, let's get everybody on board. One guy was on YouTube, I swear to God, crying, literal tears, begging some people to go out and buy an ounce of silver so they could crash an investment bank. And there was no way they could know that investment bank's position. The swaps, they were looking at one report and just reading it off of that. And it's like, oh, that's an interesting report. What are the swaps they hold? What are the derivatives they hold? Are they running this as any arbitrages? Are they? Well, I don't know. Oh, you don't know. Oh, okay. But you're getting involved in a movement because of what somebody else is doing that you don't like. And you're trying to bring down one of the largest investment banks in the world. I am not kidding you. If the videos are still up on YouTube, if they are still out there on the internet, you can go look them up. It was called Buy Silver, Crash JP Morgan. I'm a Christian, so I try and watch my language, but I crap you not. No joke. Buy Silver, Crash JP Morgan. It was all stoked by, and you know what they found out? Here's the real point of this story. Some of the people behind these newsletters, some of the people saying, yeah, we're going to buy silver and crash JP Morgan, and out there on websites whipping you up into a little fervor about all the things that aren't fair and just. Nothing's fair in this world. This world is hard and difficult. If you want justice, go look it up in a dictionary. Some of the people whipping everybody up had developed very interesting business relationships with the very people that were selling you the silver and the gold. Isn't that surprising? Not really. I realize this could be coming across as sarcastic. That's just my personality. I apologize. I'm just trying to say we have seen the proceeding play out again and again and again and again. And my question to you is, I'm imploring you, I'm pleading with you. This is a way for you to improve everything about yourself in life. Why be their donk? Why are you letting them play you? You're being played. And one of the things that many of these groups do is they fill you with a lot of partially true information. It's always been said that the best liars tell a lot of truth with their lies. So they give you a lot of true partial information to get you angry and work the Doom Arbitrage Trade. Beautiful example of that is high frequency trading, HFT. So some years ago, there was a lot of anger and angst and, oh my goodness, this form of trading is taking place so quickly and it's jumping in front of other traders, so it was said, that you're getting screwed. Have you ever noticed that never went anywhere? Would you like to know why? because all of those of us who are actual traders knew that the whole thing was hogwash. The guys that wrote those books on high-frequency trading, and some of them that had the software that illustrated how it worked, very involved software, fantastic software. The research was just world-class, and they would illustrate this in a number of ways to, show ones what high-frequency trading was doing. The individual, actually, I had an interchange with the individual responsible for that, a lot of that data. And he just flat out refused to talk to me because the one question I kept asking him is, but what does this have to do with traders? If you have a risk model, this has zero impact to you. You know the funny thing about that guy? He didn't know what I was talking about for all of his sophistication, for all of his knowledge, for all of his models illustrating HFT, which, again, are world class. He couldn't answer my question because, by his own admission, he had never placed a trade in his life. He did not understand even the basics. I mean, day one, you show up on the desk, basics of a trading program's risk model. Because if you knew even the basics, you would look at it and say, this has absolutely zero impact to what I'm doing. None. And I'm not the only one saying this. Many other very well-developed traders that are out there. I know Tom Sosnoff and his group and Tony Batista had several videos. It's like the anger and the angst is pointless. It doesn't mean anything. It has no impact to what I'm doing. You want to see that illustrated even beyond all the things I've said in the past about HFT, beyond what they said about HFT. Give you another example. Do you know trading that was going on wherein those working from a home office didn't know what exactly the price was in the middle? Because that's the accusation of HFT. Wow, they're trading prices and the people at home don't know exactly what's going on there because it's going on too fast. And if you're sitting at home, you don't know exactly what the mark is down to the microsecond, if we're talking 9 microseconds. Only 9 microseconds, that's it? That's wonderful. Do you know what it was back when I started trading? It was like 30 minutes. You had no idea where the market was, and there were people in the pits trading. You would call your broker, you would call your clearer, and it's like, hey, I want to place a trade in, let's just say, corn. All right, the very first statement they make is, all right, let me see where the market's at. And you're sitting there with the phone in your hand like an idiot, waiting and waiting and waiting as they're calling people down on the floor, and they're trying to get you a quote of what the bid and the offer is on corn. And then they come back after 3 minutes or 4 minutes and say, all right, Dan, it's X bid and 3 offered, whatever. But by the time they told you that, the market had already moved. And all of us knew this. We didn't care. And by the way, to get into that market, the commission to enter the order, $35. And $35 to get out. You're talking $70 in commissions. So, wait a minute. So now I don't have to wait 5 minutes just to find out where the market's at. And by the time I know where the market's at, it almost by definition has already moved. And I'm paying $70 commissions. You mean to tell me that now I don't know where the market is to the tune of 9 microseconds, and I don't pay any commissions except for the spread, which is a half a penny? Sign me up. And that goes back for centuries. People have never known exactly where the market is, and those who do know exactly where the market is because they are making the market literally pay a tremendous amount of money for the privilege to do so. It has zero impact. So all of this anger and angst about opaque markets and HFT, It's pointless. Absolutely pointless. Well, what about these dark pools? Well, dark pools sound scary. It just means that their size is so large that they literally couldn't put on a position at all unless they're trading with somebody else at size. And unless you've dealt with trading at size, you probably don't even know what I'm talking about. And it's all based, where does the negotiation begin? It's all based on what's on the SIP that we all can see. And as far as positioning and causing short squeezes, as we said before, yes, absolutely short squeezes happen for those that choose to trade directionally, just single market directional trading, right? But the problem with that is while short squeezes do happen, all the other participants in the markets, you don't know what their position is. There are many people that spread trade. There's many people that pairs trade. There's many people that are delta neutral. And they're just, quite frankly, working the deltas. And they're rolling and they're rolling and they're rolling, and then they're going inverted, and then they're rolling again if they have to defend it. And all of this generally starts because you're angry at somebody else. There was a very, 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 very popular YouTuber, and he really helped start all this stuff, like the Gamestop, and we're going to get the hedge funds. And his lack of knowledge as to the way markets works was stunning. These hedge funds, and you know what I saw? And I'll give you an example. So we woke up one morning before the market opened. It must have been 7:30, and he looked over at Gamestop, and he said, "Ha, we've got him. We've got him." You know what I saw the market was offered at? And let's just say it was at like $35. I saw the market was offered today, this morning at 7 o'clock, at $500. We're going to be rich today. And I tried to help him. I said, "Hey, listen, I this is what I do. This is the mistake you're making." And he bit my head off. Called me almost every name in the book. But it's like, dude, you need to take this stuff down because you're embarrassing yourself and you don't even realize it because of how little you know. That $500 offer, that's a stub quote. It's literally a placeholder. They just put it there overnight on something that will never get hit as just a placeholder for the system to hold the offer and hold the mark. And they put them so far away such that they can never be hit, after May 6, 2010, such that they can never be hit. And it's referred to as a stub quote. It's not an actual offer. And of course he got mad at me. And all he could think and say was how we are going to get those hedge funds. So his anger is leading him to look at information that's wrong. He's malinformed as to the way the markets work, and then using that as fuel for his emotional tie to a trade. Don't ever feel any way about a trade at all. That's rule number one when you start trading, right? And it doesn't just apply to GameStop. All of this applies to everything. We mentioned it before, but there's something referred to as catastrophe bias. It's a cognitive bias known as catastrophe bias. And as we've already illustrated, people will use your own cognitive biases against you so that they can make money on the Doom Arbitrage Trade. But you've met people with catastrophe bias. No matter what happens, it's always bad. You can give them good news. Hey, you know what happened? I know several people like this, actually, in my own life. Hey, you know what happened today? That's good news. Yeah, well, it'll probably suck because what's probably going to happen is X, Y, Z. Something that hasn't happened, but they've just figured out some weird scenario in their head where it's all going to go off the rails. It's always bad. It's always awful. No matter what happens, it's going to be bad. It is literally recognized by professional psychologists as a cognitive bias. So it just doesn't apply to GameStop. It applies to anything. And you see this all over finance. The number of times I have seen people play this, whether it be hyperinflation, collapse of the US dollar, buy silver, crash JP Morgan, whether it's GameStop or whatever it is, it's going to be something new in the future. Of course, catastrophes do happen. And we're going to talk about in the future how you can get so much on the other side of the spectrum. That's also bad. But of course catastrophes happen. But don't have a bias towards it, because as soon as you do, people can use your anger. You become the donk. You become the bum. You get played for the sucker. And they have already developed a relationship or a position to sell out of what they say you should be buying. And a reason why I wanted to discuss this as a trade, as a podcast, I should say, the Doom Arbitrage Trade, is time and time again, I have seen people waste literally years of their life on that nonsense. Literal percentages of their lifespan on it. And we have limited lifespans as humans. I watched during one of these little go-rounds and one of these paradigms, people waste 6 years of their life on that nonsense. That's more than 7% of a total lifespan. Not even the adult lifespan that's useful. That they have wasted more than 7% of a total lifespan on verifiable nonsense. And here's the thing. We're all playing the Theta trade. I keep on forgetting this. I'm a trader, so I know we're trying to make this simple. And as a podcast for folks who are interested in trading and interested and maybe dabble here or there, but nothing professionally, trying to make it more simple. Theta is a component of an options value, right? One of the ways I trade, short-term trade, is I sell it to people that want to buy it. I sell options, and I sell time. Time is valuable. It's so valuable, we literally measure it in markets, and we sell it to people based on their hope. So that is a metaphor. The theta of an option, the time of an option. Don't be subject to theta decay in your life of a hope built on nothing more than verifiable nonsense that's not the way the market works, and because you're angry at someone. I get being angry at people and I get injustice. Trust you me, I have faced more than my fair share. Have a business partner and he's like, man, I don't know what it is with you. But man, it's like, I swear I could be dealt pocket rockets 9 times in a row and I'm not going to win a hand. Right? That's why risk models are so important. You don't need luck. If you can play an iteration and you can grind it and you can play a risk model, then even if you're just getting absolutely hammered, you're still good and you're still profitable. And as we were saying before, catastrophes do happen. And I've been in market situations, and those who've known me for a while know it's like, yeah, during 2008, I was like, guys, this is going to be bad. This is going to be bad than any human alive has ever seen. I said the same thing as folks know in 2021. This inflation is not transitory. This is going to be the worst inflation that anyone pretty much who's alive has seen for the last 40 years. So yeah, absolutely bad things happen. Approach it with reason, with rationality, with balance. And definitely not because you're angry at somebody, which makes you susceptible to doom arbitrage trade. And one point we didn't even get to that maybe we can discuss in the future is all of this behavior that you see around things like GameStop or silver or hyperinflation, collapse of the dollar, all of that stuff. All of it's based on pretty well-known degenerate behavior, like degenerate gamblers. That'll be a discussion for another time, though. For now, that's just been our thoughts, right? It doesn't matter if it's GameStop. It doesn't have to be GameStop. In the future, I'm sure it's going to be something else. But just be aware that if something is going bad, just ask yourself, wait a minute, is this that Doom arbitrage trade? Is the person selling me this Doom basically got a story as to what I should buy? I wonder what their positions are. I wonder what their spreads are. I wonder what their arbitrage is here. Just ask yourself those questions and you'll be miles ahead of so many. But for now, that has just been what it is. It's just been my individual thoughts. That's all this is. Some people like to tune into this because they know a trader. They say, hey, I know a trader, and you know a trader, and I'm going to go listen to him. And that's all this is. It's just been my thoughts, not yours. All right. Let's have a little bit of housekeeping here at the end. This podcast is generally made for folks who are not as involved in trading per se, although I do know that traders also listen to this particular podcast. But this is more in a general way. Like today we talked about the Doom Arbitrage Trade, and that can be played in a number of ways, and it's generally played against people that are not as sophisticated when it comes to markets and how to warn them. And some of these people are dabbling in markets. Well, if you're interested in markets and if you're interested in trading, that we have another venture, or I have another venture. It's another brand that's a part of another company called GTC Traders. You should be able to find us very, very easily. We're on YouTube. We have our own website, GTC Traders. A number of partners of mine and us are basically running this brand, and it's basically allowing ones to look over our shoulder as to the way we approach markets, and sort of a mentorship brand that we are building. We are still building it. So like we've got a How to Begin Investing and Trading series. Our series or videos are on YouTube. I think there's 3 videos on it now. There's probably going to be 15 eventually. So we're building that out. We have a Patreon site. There's a lot of free information there. We have free posts. We also have a tier 1, which is basically like, listen, these are our positions. And this is a daily note, which is not our positions. It's just our view of worldwide markets so that we can cement that in. And here's our daily position review. So here's just a list of the positions according to the various programs and strategies. And this is just the positions, right? We don't really talk about it. So that's tier 1. It's very simple. I think the dividends in the fixed income systematic discretionary program that we'll run, which is run equity fixed income. It's sort of a hybrid that I came up with. I think that's printing out $16 a month. At the moment, it's still being built. It's still very new. This is everything that GTC Traders is doing is somewhat new. And tier 1 is $15 a month. So literally, we haven't even fully built out the equity income, or the portion of the fixed income portion of the portfolio that's just concerned with providing some income. We haven't even got that, good Lord, 10% of the way built yet. So it's a longer term thing that you grind on, and it's already paying over what the cost of tier 1 is. Tier 1, just to know the positions, know fixed income, know the valuation book, know the short-term trading book, what are their positions. That's only $15 a month, and the dividends are already paying $16 a month, and that's before you even get to the trading gains, right? So we think that's well worth it for just looking at the positions. Tier 2 is basically the reasons and the rationales. Many of us are under NDAs for private proprietary firms that we may work with or for, so we can't discuss those particular strategies, but good Lord. Between all of us, there may be 100 different gray box quantitative programs that we're aware of, and not all of those are under NDAs, so we talk about some of them. We talk about research that might help you understand how to think about building your own model. We talk about quantitative concepts. We talk about the reason, the rationale we have behind why we're making the moves in tier 1, and that's tier 2. That's GTC Traders. But GTC Traders is still being built, and it's for those weirdos of us that don't just want to listen to something where they know a trader. They actually want to get into trading, which I always ask folks, you sure about that? Do you know what you're stepping into? But some of us like difficult things. And so we have that. There is GTC Traders. And I will say there's much more on the way. We still don't have a host for this podcast. I'm still working on that. It's not going to be, GTC Traders doesn't want to take it on right now. It's like, okay. So right now, you can find this podcast on YouTube. And that's it at the moment. We are going to get a host for this podcast, and once we do, we will be able to push it out onto all of your favorite podcasting venues, Apple Podcasts, and Lord, there's a billion of them out there now, and we'll have it on every episode. We'll have episode 1, we'll have episode 2, we'll get them on all the podcast players and all your Spotify and all the rest of it. We'll get them out there, but we're still working on getting a host for You Know a Trader. Or maybe what I'll do is I'll just basically put it up on that platform itself, and then we'll look at any relationships we may build in the future. We're still working on it. For now, you can find it on YouTube. Hey, if you like this podcast, and YouTube has their own podcasting sort of feed. If you like this podcast, like it, share it. Say, hey, this is one of the trading podcasts I like to listen to. If you've made it this far, I'm assuming you have. If you're listening to me, obviously you like it that much. So we would appreciate you sharing this with folks as a trading podcaster, sort of a trading light. It's not like, it's like, you know, Diet Coke or Diet Pepsi. It's like trading light, sort of a trading podcast, but for everyone, even folks that are not traders. So with that being said, we will leave you to the next week, because what this has been up to this point is simply been our thoughts. Actually, not our thoughts, just my thoughts. Just me, a trader, a single trader, because you know a trader. And it's just been my thoughts, not yours, for whatever the heck date is. As always, stay safe, trade well, and remember that love doesn't cost a dime.
My friend, I long to see you on the other side. I long to see you on the other side.